Hi everyone, welcome to today's video. So on today's video, we are going to do three things. One, I'm going to speak about how am I rebalancing my portfolio and why. Very important. Number two, I'm going to answer why am I not buying any more banking stocks. Super important for you to understand because if you're invested in banking stocks, this is a must-watch video. What you should be doing with banking stocks. Third and finally, I'm going to show you live investments along the way. So I have been investing in the market this week, literally every single day. So I'll show you some of those live investments. So with that said, let's get the video started and let me first and foremost cover the point about what is happening in the markets right now. So if we analyze Nifty, now this is the Nifty 50 chart. Now if we take a look at the historic pattern, very interesting stuff. One very interesting point here is this region. So I will just draw it out for you. So this region. Now what is so special about this region? So number one, of course, the market has climbed, but look at the gradient. So gradient means slope, right? Slope, right? So you will not witness such a slope or such a sharp rise, right? Sharp rise. Now such a sharp rise for such a long period of time has not happened in the market. Now this is something really special, something which is very unique and more attention needs to be given to this. So far I have not seen people speak much about this. Now it means three things, right? So one is that of course it indicates that the markets have gone up. This is the very basic and the very obvious thing here that is happening in the market. Number two, look at the duration, right? Look at the duration. Now duration is fairly long, right? This has been happening for almost 15-16 months now that the market is going up continuously in an uptrend. This also indicates that there will be consolidation in the market. Consolidation in the market. Right? And this is the best case scenario that we are speaking about in my opinion. Now, I genuinely feel that as we are sitting on October 13th right now, the market should go into consolidation very soon, right? Because there has been a massive uprun. This uprun has happened for a wide variety of factors like liquidity injection, right? If you don't know what liquidity injection is, I've made some videos on macroeconomics. Please go and watch it. You will understand more about the actions that the federal government and governments across the world have taken. So essentially liquidity injection has happened. Now there are talks about tapering, right? So I have already explained tapering, but very quickly for people who do not know what tapering is withdrawal of liquidity from the market. So the government will start pulling out money from the market. Therefore, the market should go into consolidation. Now you will say, Akshat, why is it that the markets will not crash? Now I'll make a separate video on this. Please comment if you would want me to make that video. I will try to post it in a few days time. But essentially, I do not see any crash coming per se. But market will definitely go into correction, right? Correction and consolidation, right? Consolidation, right? Correction means that there is a minor correction of 5, 10, 15% happening. And consolidation means that from this point on, the market will behave like this, right? It will go into a consolidation mode that the market is simply moving sideways. That is what consolidation means. This is how I am seeing the market behaving in the next few months and I am taking bets accordingly. Now this part of the video is very important because this is one of the key hypotheses on which I am making my buying decisions. So I genuinely feel that right now in the market, there is something that is called as sector rotation that is happening, right? Sector rotation, right? So this is definitely happening in the market and one key evidence of this is that certain sectors, for example, in the last 1 year, certain sectors, for example, pharma, right? So pharma has shown a lot of run up. Similarly, IT companies or tech companies have shown a lot of run up. So these stocks are going to move sideways from this point on and might also fall. Now, one key example of this is TCS, Tata Consultancy Service. It has already started exhibiting that the sector rotation is happening out of the IT stock. And I have been saying this for the last month that sector rotation will happen and it has started happening now. If you take a look at the performance of TCS in the last 1 month, you will clearly see that there has been a drop of approximately 6% in the stock price and this drop has recently happened, right? So going forward, it's not as if that these stocks will crash completely, but definitely a correction has started to happen in these type of stocks. Now you might ask me that, okay, Akshat, can you explain why this correction is happening? Okay, so very quickly, I'll explain you the concept behind sector rotation also. So what is happening right now is that see, there are basic sectors which have given very strong performance, right? For example, FMCG, pharma, IT, all these sectors have moved up, right? Big players have already made money in these sectors, right? So what they are going to do is that they are going to rotate the capital to some other sectors, right? For example, right now, banks have started to give out a breakout and it's very likely that in the next few months, banking stocks are going to go up. I have again said this point on multiple of my videos. I'm not sure if you have listened to that and implemented that strategy accordingly. So I have been very bullish, and now 50% of my portfolio are pure banking stock that I've been aggregating for the last 6 months. And I'm already sitting on massive profits on it, touch wood. And I'm going to continue to hold those stocks and ride this wave of sector rotation. That is where major money will be made. Okay, so coming back to the topic that why is sector rotation happening out of tech now? Very simple, right? Very, very simple, because the US stocks, again, when I was purchasing and I made the video of US stocks, you can check it here, I categorically said that these big stocks of S&P 500 FANG stocks are going to fall. So let me take you through the performance of these big stocks right now. So let us take a look at Facebook, which is a FANG stock. So Facebook share price, and monitor it for the last 1 month, right? So in the last 1 month, there has been a fall of 14% in Facebook stocks. 14, right? We are not talking about a mid cap or a small cap stock. We are talking about Facebook, and it has lost its value by 14%. It just simply shows that the money is flowing out of the tech sector, and that will happen for majority of the Indian stocks also. So that's one. So you'll say that, okay, Akshat, we are hand-picking example. Okay. So let me show you Amazon also. So how much loss has it been, right? So for the last 1 month, there has been a 6% fall in Amazon. Again, super big company, right? Okay, so let me show you more, right? So let me show you Google. So how much loss has Google faced? So it has, in last 1 month, there has been approximately a 4.2% loss in Google also. So the money is flowing out of tech. And I've already made several videos on this, saying that even big investors like Mr. Ray Dalio has cut out his S&P portfolio for a specific reason. That S&P is indexed, like Nifty 50 is an index in India. We have S&P 500 as an index in the US. And he has cut down his position by almost 40% in S&P 500. Why? Super simple, because the FANG stocks have approximately 20-25% weight in S&P 500. So of course these stocks are going to correct, and accordingly Indian tech stocks are also going to correct. So okay, in essence, before I move forward, let me consolidate super important point. Number one, we are sitting at an all-time high right now. This rise has been very sharp, very fast. Of course the market is going to correct. Right? Of course, the markets are going to correct at some stage. At best, the markets are going to consolidate. Now, I'm not saying that go and pull out all your money. I'm not pulling out my money. I'm simply doing sector rotation. For example, I had already taken big positions in public sector bank, and they have started to perform well. For example, I was taking a look at today's performance. So Union Bank, here is my portfolio of Union Bank. I had invested approximately 13.5 lakhs on this. And today it gave a breakout of 12%, right, in just 1 day. I'm going to talk a little bit more about the banking sector stocks in section 2. So essentially what I'm trying to say about sector rotation right now is that the money is already flowing into banking sector stocks. It is flowing out of tech sector stocks. So great time to buy sectors that will get undervalued. I've started to take more positions in something like TCS right now. This is not a buying recommendation. Please don't do it, right? I'll explain it to you why I've started to take a little bit of positions in TCS right now. And if you want, I'll make a separate video on that. But essentially, please do not consider this as a buying investment advice, because people buy it today, then they expect to see performance in 2 days. That will not happen with a stock like TCS, right? So telling you categorically, please don't do that. So coming to the second key point that I'm going to cover today, that why is it that I'm not buying banking stocks right now? Okay, so this is what my portfolio design currently looks like, right? So this is my 100% pie. Now I'll not reveal the entire portfolio and what the size of my portfolio is. That is besides the point. And some of you are commenting that, Akshat, don't show live investments, etc. Bhai utha ke le jayenge, right? So I'm also a little bit scared in terms of disclosing publicly all this information, but I'll continue to make small videos around this. So essentially, more important for you to understand is the split of my portfolio, right? So right now I'm sitting like literally 50% banking stocks. 50% banking stocks. This is what I bought when the market started to correct, and I've been sitting on it making huge profits. For example, you can take a look at my Equitas holding. It is giving me good returns. Even Ujjivan Small Finance for the last 2 days, it has been climbing up. That was my only loss-making stock in the banking sector. In the banking sector, what type of stocks do I own? So I own small finance banks like Equitas, Ujjivan Small Finance. I own second category of stocks, which are major commercial banks, right? These are my long-term bets, right? Commercial banks. I will also ask my editor to put the clip. So this is HDFC Bank, this is ICICI, this is Kotak, right? These are second category of banks that I'm already owning, and I'm betting on even something like IDFC First Bank, right? IDFC First. Now, these are not buying recommendations right now, right? Because these stocks are already giving run-ups. So you must enter all these trades carefully now, because it is like trying to catch these banks right now when they are giving a run-up, right? So these are going up and you're trying to catch them. Yes, I still feel that the banking stocks will go up, but in my case, since I already have a big position in banking stocks, I want to stay diversified. I don't want to buy more and more banking stocks because that is a super risky strategy. So not advocating that, but just explaining it to you that banking stocks are good right now. No problem per se, even if you're trying to take new trades. Okay, please do it with due diligence. Understand which banks to enter versus not, what types of bank to purchase versus not. Don't go and buy only HDFC, ICICI, Kotak, right? If you're a safe investor, yes, that makes sense. But if you're trying to create a portfolio, right, then you should have different types of banks within it. That's my advice. That's my personal advice. Again, not an investment advice from that perspective. Please do your due diligence and only then take the trade, right? So the reason why I'm not investing in banking stocks right now, despite knowing that sector rotation is happening in this sector, is very simple, because I already have a big portfolio here, right? So I wanted to explain it to you what is meant by portfolio design. What exactly does it mean when people keep on talking about that I have this stock in my portfolio versus that stock in my portfolio, this sector versus that sector? It simply means that they have taken certain big positions in certain sectors. Now they don't want to get even more concentrated by buying more and more of banks, because that is not a very efficient strategy, because we can't be sure that 100% sector rotation will happen in banks. No one can say that for sure. But logic tells us, analysis tells us that the sector rotation is happening in banks, and these are going to give a breakout, right? So that's my understanding. That is what my assessment of the market is. I can very well be wrong. Alright, so now you might ask me that, hey Akshat, okay, great. So you're not buying banks, you're diversifying in other sectors. So are you going away from financial sectors completely? No, I'm not. I'm not buying banks, but I'm investing in other finance stocks. For example, recently I talked about CAMS. So that's one stock that I'm investing in. I've purchased more of it. I'll put out a live clip of some of the recent stocks that I've purchased. I have invested in Avas. That's another stock that I'm purchasing. I have invested in MAS Financial Services. All these stocks are my recent buys. Again, not an investment advice. Please do your due diligence. I'm buying these stocks because I love finance sector. I'm believing in the India's growth bull run story. And banks are going to do well. If banks do well, then as a secondary or a peripheral sector, NBFC, microfinance and other related sectors also start to do well. So I'll put up a live clip of me buying some of the stocks, not showing you the entire buying that I've done. Again, because a lot of people say that, hey Akshat, bhai utha ke le jayenge aapko. So just being cautious and just showing you some of the recent trades that I've made and not the entire thing. Okay, so I'm on my Zerodha portal. I will buy Avas first. Now this is technically a bank, but we can consider this as a financing company as of now. This is not a core bank. Okay, MAS Finance is another company that I'm buying. Amritanjan, I'm adding on more positions. I've been buying this stock for the last few days. GMMP, Podler, this is like a monopoly and I'm quite confident about this stock. I will aggregate in small quantities. So please do not do this that you are investing all your money. So a little bit of money left, so I'm buying more of Avas. So you can see the use margin is approximately 13 lakhs. So this is the total purchases that I have done. I also bought NLC India. So what you will see is that I'm buying a few finance stocks, not necessarily banks, and I'm diversifying my portfolio. Okay, so after listening to my story that markets are up, they are going to consolidate, sector rotation is happening in banks. I am already heavily invested in banks, so I'm not taking new positions, but investing in other finance sectors also. In addition to some of the other stocks, like I have recently purchased, and I talked quite heavily about it, about Amritanjan, right? So that was one of my recent buys, and I'll keep on aggregating more positions in that stock. Now, there are a few quick disclaimers and points that I would like to explain it to you. Please understand these points. If you understand half the points, take half the trades, understand half the situation, then yeah, that will only lead to loss. So let me aggregate some of the key points in the market right now. Number one, should you be investing in today's market? Because I'm saying that, hey, markets are going to consolidate and markets might fall also. The answer is yes. There are always good opportunities to buy stocks even in a rising market because of sector rotation. Because some sectors are overvalued. Don't go and buy a lot of tech stocks right now. Buy stocks that are currently undervalued. So it has got nothing to do with the market. You are not doing a Nifty 50 investment right now. What you are doing simply is you are trying to find fundamentally strong undervalued stocks. For example, according to me, Amritanjan was one such stock. I talked about it. Here is a video on it. So what I'm doing right now is called as value buying. I'm not doing growth investing right now. I've already done growth investing. Now, someone please explain me the difference between value investing and growth investing. Please put your answers in the comments. I will also put my answer in the comment somewhere. I have explained this concept very recently on my videos. It helps me understand that you are also understanding concepts from my videos. So that is the first key point, that don't just sit on the sidelines, invest. Try to figure out stocks where you can put in your money. That's point one. Number two, if you're doing your SIP, please do not stop it, right? A lot of people message me that, hey Akshat, markets are hitting all-time highs. Should we stop our SIP and figure out when the market falls down? No. The entire purpose of doing SIP is that you want to take averaging benefits. For example, right now, the market is at 18,000. So, if you have made an SIP of 10,000 every month, and if you continue to invest that in today's market also, you will end up buying fewer units, right? So, nothing wrong with that. When market falls, you are again investing 10,000 rupees on it. So, you are buying more units. So, that averaging benefit will still be there for you. So, please do not stop your SIP. Please do not think that the markets are overvalued, undervalued. No one can predict that. Number three, you must keep an eye out for sector rotation, because now if consolidation starts happening in the market now, what will happen is that the markets are going to consolidate for a little bit of longer duration, right? It might go up to 6 months, 8 months, even a year maybe, right? It's not as if that you should stop buying everything, because sector rotation will 100% happen even in a sideways market. So please understand where sector rotation is going to happen next, do some analysis and accordingly take bets. Don't invest in overvalued stocks right now. That could be disastrous for you. This brings me to fourth and final point of the video about risk hedging, that how you should be hedging your risk in today's market. Okay. See, now 2-3 scenarios can play out in the market. One is that it consolidates. Look out for sector rotation. Understood. Number two, markets will fall. So what type of stocks will fall first? Okay, a lot of stocks might fall, but especially companies with high debt, companies with poor financials, those are the ones that will fall first, right? So please be wary of investing in those type of companies. Only invest in fundamentally strong companies right now, because for example, let's say that market correction happens and market falls by 15%, and if HDFC Bank falls by 20%, will you be scared? The answer should be no, right? Because HDFC, we know that it will come back and it's okay. There is no harm in holding that. But if you're holding some stock without understanding why you're holding it, and if that stock is not fundamentally good, you will get scared, you will sell it off and you will run away, right? And you will end up with a lot of loss. So please only invest in fundamentally good stocks that are available at low prices at this juncture. That is my final advice to you. I hope you enjoyed the video. Please press the like button. It helps us with the YouTube algorithm, and I will see you the next time.